Hello, everyone, and thank you for joining us today for U.S. Gold Corp's live event. Today, we're joined by George B., their president and CEO, and Luke Norman, chairman at U.S. Gold Corp. They'll go through a presentation, and following, there will be a live Q&A session. So please feel free to submit your questions in the bottom right corner in that chat box, and we'll be addressing them. Note that this event is also being recorded and will be available to watch shortly afterwards. With that, welcome, gentlemen. George, the floor is yours.
Thank you very much. I really appreciate the opportunity to share with you the U.S. Gold Corp story. I'm George B. I've been in the business for about 45 years and last 4 years working on this. Luke Norman, our founder, chairman of the company. Luke, did you want to introduce yourself?
Certainly. 25 years experience, precious metals primarily, public companies. And this company we founded in 2017, took public on NASDAQ therein, and got an exciting story to tell you about today.
All right, so with that, let's get right into it. What we're looking at is a company with a project on track to be the next gold producer situated in Wyoming. So I will be making some forward-looking statements, so please take note of those and read those at your leisure. So what makes U.S. Gold Corp different? Well, as I said, we have a shovel-ready project situated in Wyoming. It offers compelling value, and we've now got an approved mine operating permit, and we're advancing towards development in a resource-friendly jurisdiction, a jurisdiction where we know the rules of the game. And that's of great importance these days. Lots of other jurisdictions, one's not so sure of your security. We also have in our portfolio the Keystone project in Nevada. And the Keystone project in Nevada was, up until 4 years ago, what we were focused upon. We will touch that. It's a fantastic opportunity in one of the great gold fields in Nevada, a really mining-friendly jurisdiction, a great gold producer. Also in Idaho, we also have our Chalice project. That's near to the Bear Track Arnett project, which is owned by Revival Gold. So, we've got the experience, we've got the folks that can pull this together, and we'll talk about the share structure and the company in a moment. So, just from a financial standpoint, we're tightly held. We're listed on the NASDAQ, which is a bit of an anomaly for the U.S. For resource companies, particularly in the junior space. 10.7 million shares outstanding. You can see the warrant position there. We've got cash on hand, and we are essentially beneficial owners ourselves as far as officers and directors. I don't know, Luke, do you want to add to that?
Yeah, look, it's just a unique structure. Obviously, NASDAQ listed with 10.7 million shares out, as you mentioned, puts us in pretty rarefied territory, especially with a U.S. asset, U.S. management. It bodes well for us coming into this very strong secular bull market, we feel.
And we do have some analyst coverage. H.E. Wainwright, Alliance Global Partners. Both of those analysts have been onto site. Jake Selesky's been on site a couple of times. He really gets the story, and we can certainly share the analyst reports. We are looking to move towards some coverage in Canada, but at the moment, those are the folks that you can resource as you look at the project. So this is an overview slide and an introduction, but it serves quite a purpose here. And what you can see is that what we're looking at is an open pit mine The surface extent of this open pit mine is 80 acres. And essentially what we're doing on a very low strip ratio, 0.9 waste to 1 ton of ore, is mining, setting waste rock aside. I'm going to come back to waste rock in a moment, because that's a very interesting part of the story. But then the ore is transported out to a primary crusher, into a stockpile. Then we go into grinding, and it's a flotation. This is a sulfide deposit. So what we will be producing is a sulfide concentrate, a copper gold concentrate. It's a very attractive concentrate because it doesn't have a lot of the deleterious elements that are a problem associated with some deposits, such as arsenic, such as mercury. So it's a concentrate which will be in very high demand. And once we've extracted the concentrate, what you see here is a tailings management facility. Now, we're situated in Wyoming. Wyoming is a resource state, but it's also high and very dry. And as a consequence, we didn't even consider going to a conventional tailings. We went straight to a dry stack tailings scenario. So you can see this is a dry stack tailings pile. But the other thing to note about the project is this is essentially a mile. We're situated on 2 sections. A section is a mile by a mile, so it's a very compact project, which speaks to the costs structure for the actual operation. So let's talk about location. And we love the location, and location is really important. Some of my prior projects, working with Barrick over the years, developing the Purina mine in Peru, or the Valadero mine up in Argentina, high up in the Andes, remote from civilization and so on. We are far from that. We're situated about 20 miles from Cheyenne. These are the claim boundaries, the resource. This is a lease area, and our lease landlord is the Office of State Lands and Investments in Wyoming. So we're actually on state and then surrounded by private ground. And that's a very important factor from a perspective of permitting. We're not associated with any permitting with the federal government. The only nexus to the federal government were these drainages, and we do not touch those drainages. So we have a notification from the Army Corps of Engineers that we're non-jurisdictional. So all of our permitting is associated with the Wyoming Department of Environmental Quality. Their head office is situated in Wyoming. We've got a great relationship with them. And that is how we have come to the point where we are now permitted, shovel ready. Last year, May 2023, we received an industrial siting permit, which is a permit in Wyoming for the state to help accommodate large capital investments. So that was unanimously approved. And as of May this year, we had our mine operating permit approved. It was conditional on 3 things: a water discharge permit, which we now have, putting in place a bond for our initial disturbances, which we've put in place and it's been accepted, and an air quality permit, which we've just been through the public hearing. We expect that any day now. So we're permitted, shovel ready. What I'll also say before we leave this slide is that location is important. And as you see, we have the I-25 and the I-80 interstate corridors. So we're about 4 hours to the south of Casper and Gillette, Wyoming. We're an hour and a half to the north of Denver. We are 6 hours from Salt Lake City. All of the major equipment suppliers are represented in those areas. So in terms of being able to get supplies, get parts, get equipment, we're very well situated. So that has a consequence on the mine. We don't have to build a whole bunch of warehousing, large stacks of critical spares and so on. That reduces our initial capital cost. Obviously, we don't have to build a whole bunch of roads because we're very close to the Happy Jack Road here, which is a paved road. And this is County Road 210, and our access onto the property is about 4 miles of private road onto the property. In some of my prior projects, we've had to build man camps in remote locations. This location is great. People be able to go home at night, either to Cheyenne or to Laramie. And we think that is going to be a very competitive advantage over other mining projects at a time when it's tough to get skilled labor. This is obviously going to be a desirable place to work because there's no overnight stays in man camps and so on. So support services, emergency services, equipment suppliers are all very easily accessible. So what are we looking at? So essentially, we've got a shear zone hosted in a granodiorite host rock of copper and gold, sulfide copper and gold mineralization. You can see here, this is an image of the open pit with an image of the different, with the ore body. Some of our best grade outcrops at surface and very, very low strip ratio. Overall, it's 0.9 waste to 1 ton of ore, but certainly at the beginning, and we'll mine this pit in 4 phases, very, very low strip ratio, which certainly helps with our payback. So what kind of an ore body is it? Well, there's a bit of debate about that. It fits and checks the boxes of a number of different types of ore body, IOCG, porphyry, and so on. We had Dick Silito on site June 2022. He figured it was a porphyry and said that these things don't happen in isolation. But we are in an old historic mining area. It was called the Silver Crown Mining District. There were lots and lots of small excavations in the day, late 1800s, early 1920s. And it was discovered as the railroad came through the area. So from that perspective, we've focused on this ore body, putting a value proposition around the first 1 million ounces of gold that we know in proven and probable reserves, and 248 million pounds of copper. So again, very compact. What we decided to do right from the get-go is, rather than spending treasury on making it bigger, and the project will get bigger because we have mineralization below the pit and to the southeast, what we decided to do was put a value proposition around that first 1 million ounces of gold and the 248 million pounds of copper, and in full knowledge that we can expand the pit at depth and generally to our southeast. We've got a very interesting trend down to our southeast. So it's a simple mineralogy, chalcopyrite, predominantly containing the gold and copper. Now, I'm going to come back to it, but you can see that there's a halo of waste rock sitting around the ore body. And waste rock is a relative term, because what we now understand is that the rock that we're going to mine and set aside is a very valuable asset. So we'll talk to that in a moment. So dead simple project, a junior company. You don't want to be employing anything which is technically challenging or new technology. So essentially here, you've got an open pit. Here we're showing some of the excavation in year one, which is then the ore is delivered to a primary crusher, stockpile into the plant to produce the concentrate and the tailings. We will set aside some of the lower grade material to bring revenue forward in our mine plan. We accumulate a stockpile and then toward the end of the life of the mine, deplete that stockpile and that will be gone. So we've been working with Samuel Engineering out of Denver, Colorado to do a lot of work essentially on the design of the plant. We essentially use a semi-autogenous grinding with a ball mill, pebble crusher, and then into a flotation plant. And then from there, we filter press, recover the water, and recycle the water for the dry stack tailings. And we will mechanically handle the tailings onto the pile. So these numbers are a little dated at the moment. We're in the course of updating them. But as of December 2021, we put that initial reserve into a 10-year mine plan, operating at 20,000 tons per day. Nominally, 110,000 gold equivalent ounces per year. Gold equivalent being, converting the copper into an equivalent copper value. And we had a, really low AISC associated with it. That is due to the low strip ratio, very short hauls, low power cost. We've got a plant nearby that produces the explosives, and obviously our location. So the initial capital was $222 million. That is essentially for the concentrator. We're considering contract mining with low sustaining capex. Now those numbers were all done at 1625 gold and 325 copper. So what's changed? Well, the copper and gold prices have increased and increased fairly spectacularly. But, as far as on the cost side, yes, there's been inflation, labor costs have gone up. We did see, and we're coming out of now, initial capital costs going up because of the post-COVID supply disruptions and so on. A lot of those things are leveling out now. There were some additional requirements as a result of permitting. At the moment, what we're doing is, and we press release this in September, is we're looking at some alternative flotation technology. Our initial numbers were based on just conventional flotation. We're actually currently testing at Base Metal Labs in Kamloops. The Jameson cell is a Glencore technology piece of equipment. It's been around since 1986 to see if the Jameson cell can give us a little bit more recovery. And also, we're told by Glencore Technologies that we can reduce the footprint within the plant and also reduce our power cost. So on top of that, we're also looking at the potential to sell our waste rock as aggregate. And as I mentioned, there is a periphery material. It's granodiorite. It's very clean granodiorite. And what we did was essentially looked at that rock as an opportunity to to mitigate our own capital cost. We need rock aggregate for the concrete in our plant. We need aggregate and crushed rock for overliner material, under drains, French drains, road dressing. So we tested the rock. And what we found was that the rock was very much suitable for aggregate and for our own purposes. And then we said, well, heck, and I'm actually going to just go back a couple of slides just to put this in context. So we know that we've got a rock producer. Martin Marietta Minerals operate the Granite Canyon Quarry, situated 3 miles to our south, and they're selling their rock at the gate at $25 a ton. So we said, well, heck, we can produce rock and that will mitigate some of our construction costs. But then, we have surplus rock as a consequence of our mining activity. So these two piles here essentially represent 40 million tons of rock, which can serve the local market. Here is Cheyenne. To 35 miles to our west is Laramie, and 50 miles to our south we have Fort Collins, and then all the way down Fort Collins all the way to Denver, about 100 miles away. So we've done a lot of work now on testing the quality of the rock and looking at the market, and the rock is a real opportunity for us, which are not factored into our economics at this point. What we've permitted is a copper and gold mine, but we feel that there is a pathway to essentially selling that rock as a byproduct. So that's a really exciting opportunity for the project as we move forward. So let's just summarize that. It's a simple truck shovel operation, 100 to 150 ton class trucks, 20 yard loaders. There's a 100-ton truck class, there's a 777. There's lots of them. There's lots of contractors in our area. A lot of interest in and competition to help us out with our mining. We're in a fuel producing state in Wyoming, very competitive fuel prices. As far as the process is concerned, we've got a high value copper gold concentrate with no deleterious elements, so it's going to be very marketable. Smelters will actually take that concentrate and mix it with other concentrates for their feed to control some of the other parameters. So it'll be very desirable. Our nearest smelter is at in just outside of Salt Lake City, near Kennecott. But we've also been talking to Glencore that have the Horn up in Quebec. And because the concentrate will be nominally 20% copper and 40 to 50 grams per ton of gold, it's a high value concentrate, and it would be attractive even to send it over to the Asian markets. So we'll be looking at where we can get the best deal for the concentrate as we move forward. I've already discussed proximity to Cheyenne and labor and very simple logistics. We think that this is a real win-win for the state. As I mentioned, our landlord for the mineral is the state of Wyoming, the Office of State Lands and Investments. The revenues from a royalty, which will be 2.1%, are earmarked for education within the state. So that's really great. The royalty payments will bolster the education budget, which we understand at the moment is in a bit of deficit. So it's a really good news story for the state. We'll create over 200 direct jobs and many more indirect jobs and additional economic activity within Cheyenne. I mean, Wyoming is a resource state. They generate significant revenues from the extractive sector, coal, oil, gas, and trona. So this is a diversification. It's the first copper and gold mine for many, many a year, and provides the state with diversification and proceeds for the coffers of the state budget. With the waste rock providing a potential source of aggregate for construction, we're also very close to not only being able to deliver that rock via truck to the local market for aggregate production, but also we're close to rail lines. We have a Union Pacific rail line 3 miles to our south, and we're approximately 7 miles away from the BNSF line. There's a great demand for not only aggregate, but rail ballast. So getting a connection onto rail expands the market area for waste rock. So we're looking into that at the moment. We're also developing water resources, which will benefit the state locally when we're finished, working with the Cheyenne Board of Public Utilities. And certainly the exhausted pit provides an opportunity for storing water. So we've done this. We essentially I started with the company to push this project forward. In September of 2020, we collected 2 years of environmental baseline and prepared a permit application. We submitted that permit application in 2022, and as I say, as of now, we are fully permitted to proceed with the development of the project. We're going to be buying our water from the Board of Public Utilities, and the City Council approved our water. So we've done a lot to assist in our permitting exercise. We've done a lot of social outreach, and to date, we really have enjoyed some good support and good relations with our neighbors. As we look at the mine, ultimately our initial mine plan is 10 years. We think it'll go on a little bit longer, but our initial and our current closure plan is to partially backfill the open pit, to cover the tailings and the waste rock piles, and return that to the current use, which is grazing and certainly habitat for some of the local wildlife. Now, this is that is our current closure plan. However, when we look at the open pit is a potential to expand the capacity in the Kurt Gowdy Park, which is the area where Cheyenne stores its water. And you can just see on this slide, this is from the Wyoming Parks Department. There was a project, or there is a project, to increase the levee and the dams on these impoundments to increase water storage for the growing need of the city of Cheyenne. And rather than increasing the storage on these two dams, we are proposing that we could probably look at storing the water in the open pit when we're done with it, which obviates the need for them to have a huge civil project with huge disruption to the park. So we really think that could be a win-win situation. And additionally, as you look at the waste rock piles, it seemed crazy to develop to stack those waste rock piles and then cover them up and bury them when there is a huge demand for waste rock in the area. So we believe that we can monetize that. And, as I mentioned, Martin Marietta selling rock for $20-25 a ton. We've got a pile here, which is 35-40 million tons. There's a margin, we've already paid for the mining. So rather than having to reclaim and bury that rock, we can actually send it to market, monetize it in benefit of the project, save somebody having to mine rock elsewhere, and have another excavation, and we'd be paying a royalty to the state, which is a real win-win-win situation for a closure scenario, reduces our closure costs. So really what we're looking at as we look forward is the impact of significantly higher metal prices, the potential of being able to sell a very high quality aggregate and rail ballast, and that's not currently captured in our numbers. There is a vibrant market. We've done a market study on that. We certainly have additional mineral resources at depth, so the pit will get bigger in time. And at the moment, what we're doing is optimizing that and putting that into an updated pre-feasibility study before we move forward. So permitting, we'll announce the air quality permit here shortly. We've been through all the public commentary. We're advancing the engineering. The aggregate study is, the initial aggregate study is well advanced. We've got attractive financing options, talking with the providers of the concentrator equipment. Later on, as we get into operation, there's the opportunity to help the city out with water storage, and then we'll be moving towards construction and production. So before we pause and go to questions, we're going to talk a little bit about some of the exploration opportunities we've got. And I'm going to lean on Luke here a little bit to help out, because I came on board with a view to developing the CK Gold project, which is now well advanced. But I will say that I spent years through 88, 89, through 95, developing and operating the Gold Strike mine for Barrick. And so I'm very familiar with Nevada. This is, and here we are situated just to the southeast of the of the Nevada Gold's Cortez complex, situated in between the Cortez complex and further down the trend, McEwen Mining's Gold Bar mine. We've got 20 square miles of prospective territory. And Luke was very much involved in that before we pivoted towards development at CK. So Luke, do you want to take a few words on this?
Yeah, absolutely. And I'll keep it short, of course, because we've kind of taken a lot of people's time on the presentation side of things today already. But look, Keystone represents a massive opportunity for this company. I mean, it's a district scale project sitting near Barrick's flagship set of mines now, which is the Cortez complex. My previous company that I was a co-founder of, Gold Standard, we had a very similar project, and that buoyed us to almost $1 billion in market cap at one juncture through the exploration phase. So exciting project like this going into a big gold bull market definitely needs the light of day. So we intend, and we are exploring avenues to go in there and do some wide scale exploration. Highly likely we will maybe spin this out of the company and make it a standalone opportunity for the shareholders who are already invested in the company, but we'll work towards that. Clearly we're well positioned already with a near-term production asset in Wyoming. So that's our core focus. That's where we're generating value right now. But by all means, keep an eye out for Keystone, because news will be coming on that project in the coming weeks and months. And we think that's going to, again, represent some additional value. Whereas right now it's largely overlooked in our portfolio. So I'll hand it back to you, George, and we can open up for questions.
Right. Well, look, just generally, we've got a number of targets. We're permitted, we're ready to go. And for our initial drilling program, we've just discovered a brand new area from spectral survey mapping. There's lots of, and you can certainly go through this at your leisure, lots of similarities between Keystone and Cortez, primarily the fact that we've got this Wenban unit, which is the host unit for a lot of the gold ounces in the Cortez complex. Two opportunities really: near upper plate, near surface oxides, and then monster sulfide deposits at depth. Again, all the right type of rocks, the right type of alteration, near surface oxides, and the potential for deeper sulfides. This is a Chalice property. We're just renewing a mine, a plan of operations with the Forest Service to be in position to start drilling on that project. But it's a historic mining district in Idaho, another great jurisdiction. So just quickly, we do things the right way, looking after the environment, certainly good governance, and we're looking towards certainly being a great partner. We've got a great management team, great directors, and poised to move forward. So great portfolio. We know what we're doing. We've largely de-risked the project in Wyoming. We've got great upside with Keystone and very tight share structure. So with that, I guess we can open it up to questions.
Excellent. Thank you, George and Luke, for the thorough presentation. For any individuals that came in a little late, we are taking questions, so please feel free to submit them in the chat. There was quite a few questions submitted upon registration, and out of respect for the people that took the time to ask them, I'm going to ask them, even though some of them you may have addressed during your presentation. So the first question is, can you touch on the metallurgy and recovery rates for the gold and copper? Are you looking at ways to improve the recovery?
Yeah, look, again, as I mentioned earlier on, we wanted to go dead conventional, so we looked at conventional flotation. Look, this isn't an oxide deposit. There is a little bit of oxidation at surface, but it certainly wasn't worth putting in a separate process. And we did find that we got recoveries with conventional flotations right from some of that surface material. So we get about 85% copper recovery, 70% gold recovery, depending on how hard we pull and so on. But the latest exercise is to see whether the Jameson cell, which is a different type of flotation, it's been around for a long time. Essentially, you've got a lot of smaller bubbles mixing with the slurry in a very compressed space, which gets great contact. So we've got pretty good expectations. We're testing it at the moment that we're going to get some better recovery. And then if these cells are appropriate, they consume less power and occupy a smaller footprint within the plant. So that's just the update that we're looking to incorporate into our pre-feasibility at the moment.
Sticking on with the pre-feasibility, another individual asked, or stated rather, 2021 is quite some time ago. The price of gold and copper have increased, but so have the costs. What can we expect from the pre-feasibility update?
Look, we obviously are seeing increased costs. I think everybody's been hit by inflation, but the increased costs offset by increased metal prices allows us to preserve our margins. So we still believe that you're going to be seeing a very attractive project as we move forward.
And a question posed in registration and in the chat, I'll ask. I do recall you mentioned or discussing it briefly here. What is the status on the air quality permit? Omar said it's been a couple of weeks since public comment period ended and the public hearing held. Thank you.
Yeah, we understand that there were absolutely no comments. We did organize or elect for the Air Quality Division of the Wyoming Department of Environmental Quality to hold a public hearing. We didn't see any comments arising from that, and we understand there were no comments during the 30-day comment period. So at the moment, the air quality permit is in the hands of the air quality director to finalize so that we can get final confirmation that that air quality permit is granted, and we've relieved that final leg of the conditions for our mine operating permit.
So, thank you, George. During the presentation, you mentioned the waste rock as a potential asset, and Omar's wondering in the chat here, is pre-selling some of the waste rock or some of the close to surface gold something you're pursuing to raise equity?
I'm happy to step in there, George. I mean, we're exploring all avenues of obviously how everything ties together and optimizing, this amazing copper gold deposit that's sitting there at surface, but then that extended value, which is outside of any of the economics that we've forecast to date, this larger footprint of hard rock aggregate source. It's a very tight marketplace. We're just on the border of Colorado. Colorado has huge demand for this type of rock. So we've kept the two separate. We continue to do so and explore the opportunity within the aggregate. But again, the economics that you've seen today are all derived around the copper gold. So it's ongoing how we will ultimately finance this project. But yes, we have our highest grade at surface. This deposit obviously is amenable to a potential higher grade sort of entranceway. In fact, our years to payback obviously are very short if you do take a look through our presentation. So a short answer, we're exploring all avenues.
Now, there's a couple questions both pre-submitted and in the chat regarding additional funding options. Now, you do have a tight share structure, so there's always that option there, but
we're stingy.
So there's a few questions I could pull on a few threads here. I guess I'll go in order with SJF468's question. Can you speak on who holds most of the warrants?
Yeah, we have a schedule of warrants within our presentation. You'll find that on the website, of course, usgoldcorp.gold. We also have .com, but I'm not sure if they're actually linked up. We just recently made that domain purchase. But we have extensive warrants ranging from in the $6.15 range all the way through to, I think, $14, $16 warrants. The majority holder is an investor that came in through a large hedge fund out of the US that came into the stock through kind of the down cycle in the marketplace. That they're, I think, triggered around $6.15. So that will be obviously a huge capital infusion into the company if we can continue our path forwards in this bull market and bring that capital in.
Thank you, Luke. To continue on with this discussion, Now, if I recall, it's 220 something million initial capex. Do you have the cash to develop this project, and what are the financing options? Albeit
No.
royalties,
Well,
loans?
short answer, no. We've broached that conversation, but I'm happy to get into it. For one, $222 million was the 2021 forecast. You would expect that number to be pushing $300 million now in our upcoming pre-feasibility study. We're working on that diligently. I think George touched on that at the beginning of the presentation. So imagine it's more of a $300 million undertaking than it is 222. Our current market cap is $65 million. So people see those two headlines offset and get a little bit of sticker shock. I think that's just an unrealistic kind of separation between the actual asset value and our market capitalization. Now, how does that happen in a marketplace? Well, we know that the market is never wrong, right? That's the assumption. But lately, we've seen in our industry in particular, a real separation between asset values now and where they should be relative to the price of gold. So we're expecting a lot more interest as gold continues this bull cycle in the project. Now, also clearly the $300 million would not come from equity. So we have potential to sell gold up front through a stream. We have potential to be able to sell some of the waste rock or aggregate source up front, and also stream some of that as well. And then clearly there is debt. So there is debt on equipment. A large part of that is plant that'll be coming from manufacturers, just like when you buy a truck from Ford or Chev, they'll supply the equipment and do it at a very reasonable interest rate. So there's a myriad of ways for us to finance this project. And clearly, again, I'll use the word stingy. Look at our share structure, 10.7 million shares out. We've been very, very protective of our equity shareholders, and we will continue to be as we move into the development phase of this project. But the 3 years of boredom waiting for permits is over. It's one of the only fully permitted bucket-ready projects in all of North America ready to go. So it's going to attract a lot of interest.
I'll just add to that, we are shareholders. I think I was last in the market at about $5 and buying shares. And so our interests are aligned with the shareholders. So you going out and putting a lot of dilution on an equity raise is not an avenue that we're fond of either.
Yeah.
So thank you, gentlemen. With this shareholder alignment, is there a path that makes sense where you won't just be focusing on development? Is there any allocation of capital dedicated toward exploration? There's clearly some further potential in that department. If you could discuss.
Yeah.
That.
Look, going into establishing an economic framework, it was a multi-step process. One, we had to prove that there was an economic viability around the Copper King asset or CK asset. So we could have continued to build resources because the deposit continues to depth and it continues laterally. There's far more ounces in the ground, we'll say, than there is shown in the P1, P2 reserve category. Because the reserve category is a very, it relies on a lot of geostatistics, a lot of drill data. Now, we could have continued to follow the deposit to depth and followed it laterally, but, that would have just been further dilution on an asset that we ultimately needed to be able to prove could be permitted. So we've got to that juncture of permitting. We've got this P1, P2 reserve. And moreover, now what we see is an acceptance and an understanding by the sophisticated mining investors and some of the analysts that, yes, this deposit will continue both depth and laterally. So going in and spending additional capital and taking dilution at this price range to chase more ore and bring in more reserves would be, it would not add value. It would just dilute the company further.
Yeah, we focused on putting a value proposition around what we know that we have, and then demonstrating that we can get the permit, which we've done. And there was no point in burning up treasury, just making it bigger for the sake of making it bigger. We know it's going to get bigger.
Thank you. There's one last question in the chat from Tom here regarding community relations. He's wondering if you engaged with local landowners in the vicinity of CK, and if so, what did you find to be the best approach in informing them about the project?
Extensively. So we had in-state specialists who worked with the community tirelessly right from the onset of moving this project forward. So it had its own standalone website for the community with information and updates, the process of mining that was going to be used, results from blast testings, all sorts, including that. Then George and his team tirelessly continued to keep all of the local community up to speed through regular get-togethers, kind of town hall type gatherings, and then ultimately through the permit process. So Department of Environmental Qualities in Wyoming, through this process, multiple of our permits that all come together to create that permit to mine saw light of day through articles in the press, on-site, online areas where you could go in and you could put in complaints or lodge, different queries about the project. So that was just an ongoing process, and that community has been tremendous and very supportive still.
Yeah, look, it's all about boots on the ground, and so I live in Utah, Park City, Utah. It's 6 hours away, and I'm over there a lot. We've got great relations with our local ranchers, and they're salt of the earth people. The key is transparency. Tell them what we're going to do, when we're going to do it. Be respectful of their land, respectful of our relationships. We've had well over. We sent out booklets. We've had well over 200 meetings. We try and do smaller meetings, smaller groups, so you can actually really talk to people, get a read and address the audience. But so far, everybody has been really friendly and supportive.
Excellent. Gentlemen, thank you so much for this presentation, and thank everyone in attendance that submitted questions. If you came in a little late, this is being recorded and the replay will be available within a couple of hours here. Are there any closing remarks before we sign off for today from either of you?
Yeah, I think, again, we represent a remarkable opportunity in the gold space with copper to back it up. A senior US listing. Most of our peer group, obviously, are Toronto listed. It's very difficult for a US investor to access, the smaller exchanges, Toronto Venture Exchange, etc. So I think we're a really good proxy for gold ownership. The junior miners are always the ones that leverage the best to a bull market in the gold industry, in the gold space. So, you've got access to gold, you've got access to copper, and a heck of a backup with our potential materials side business, which will be in aggregate. So, we welcome more questions. We welcome anyone to reach out to us. Our website, again, there's contact information, and I just want to thank everyone for taking the time.
Yep. Thank you so much. Appreciate the opportunity.